Hey everyone, and welcome back to Money Journey. Today we are diving deep into the latest earnings report from Baidu, the tech giant behind China's most popular search engine. We'll break down the key takeaways, discuss the good, the bad, and the ugly. Is Baidu a buy, sell, or hold after these results? We'll analyze the fundamentals, valuation, and future prospects of the company. So, if you are interested in Chinese tech stocks or want to know more about Baidu, stick around. Let's get started. Baidu posted a 3% drop in the third quarter revenues, but beats the market expectation. Noted a 12% surge in its non-online marketing revenue to the equivalent of 1.1 billion, mainly driven by its artificial intelligence cloud business. This looks like good news, but the stock is down 5.6% after being down more than 7% during this day. So what happens? I will start with the words from the co-founder and CEO of Baidu. Baidu scores flattish third quarter top line reflected the ongoing weaknesses in our online marketing business, offset by the growth of our AI cloud business. Bear in mind, Baidu's core business is advertising and their search engine, which is having some difficulties growing their revenues in the last few years, doing the bad shape that the Chinese economy is at the moment. Our strong AI capabilities are gaining broader market recognition, as evidenced by increasing adoption of ERNIE, an intelligent driving. Apollo Go continues to lead the global autonomous ride-hailing market, hitting another milestone with our sixth-generation autonomous vehicle now operating on public roads across multiple cities in China. Other business segments that we see in Baidu is autonomous driving. They have full self-driving vehicles, and they have cloud. It's one of the biggest cloud providers on China and one of the biggest AI intelligence company. Despite the near-term pressures, we remain steadfast in our AI-focused strategy and are confident in our long-term trajectory. As we further scale AI, we are emboldened to find how it can drive innovations and create value for consumers, enterprises, and society at large. Words from the CFO of Baidu: our relentless focus on cost control helped support our third quarter results. Baidu Core's operating margins remain stable as we manage to further optimize costs and realize more cost efficiencies between business units. Baidu is in investing mode, so they are spending a lot of money to invest in their future growth, and it's important to be really efficient when you are investing. So Baidu remains very profitable, even though they are trading at a lower valuation if you evaluate that by price to earnings ratio, for example. They say AI cloud continued to show healthy and sustainable development in the third quarter. Meanwhile, Apollo Go continued to make operational strides, underpinning our confidence in the validity of the fully autonomous ride-hailing business model. Robotaxis, full self-driving is an area that is growing a lot, and there are a lot of investment in this area. And Baidu is not seeing an increase in their valuation because of that. So, if you do the sum of the parts of Baidu, that is what we should do. Baidu might deserve a higher P ratio, for example, because they have this great business like cloud, AI, and the full self-driving, for example, that if you see other companies, these businesses are trading at a higher PE. So that's one of the reasons you might find Baidu really cheap or undervalued at the moment, but this is just my opinion. Results were actually not bad. Operation highlights: Baidu was upgraded from the prior BBB rating to an A rating by MSCI. Strong fundamentals on their business and the great balance sheet is reflecting on this upgrade. Baidu returned 161 million to the shareholders since the last quarter, bringing the cumulative repurchase to 1.4 billion during 2023 share repurchase program. So a lot of buybacks. This is confidence vote from the management that they believe that Baidu is incredible undervalued, and when you see a company doing that, you have to be positive on the company. AI Cloud was the bright light on this report. So even though we see weakness on the consumer ad spending, we are seeing a lot of investment in cloud and AI. So Baidu will be fighting with Alibaba Cloud, for example, but with this latest reporting this quarter, the cloud providers are growing. Their revenues are starting to increase and their growth are resuming. So we are seeing a lot of investment in technology and on AI on China. So this is a pattern that we are seeing in the latest report from these tech companies on China. So overall, we are seeing good growth in this new business from Baidu, but their advertising business is facing some difficulties. But with this stimulus, we might see maybe in 1, 2, 3 quarters resume to growth, and when that happens, we will see Baidu taking off for sure. So there you have it. Baidu's latest earnings report has shown mixed results. While revenue was slightly down, we saw solid growth in their cloud and AI businesses. However, profits were impacted by increased investments in these areas. The online ad spend from smaller business continues to be a concern, but there is hope that China's recent stimulus measures will eventually boost this segment. One of the biggest highlights is the growing recognition of Baidu's strong AI capabilities. Ernie, their AI model, is gaining traction, and this could be a significant driver of future growth. Overall, Baidu is remaining an intriguing company with a strong business model. While there are challenges ahead, their focus on AI and cloud computing positions them well for the long-term growth. Thanks for watching, and let me know your thoughts in the comments below. Don't forget to like, share and subscribe for more tech and investment insights. See you next time.